Hi, I'm Tim Bradner. Welcome to Capital Views. And thank you for joining us, Angela Rodell, by Zoom today. Angela is the CEO of the Alaska Permanent Fund Corporation, and that's the permanent fund is something we're all interested in these days. So, Angela, financial markets have really done well in recent weeks. Has that helped the permanent fund?
Oh, absolutely, Tim. And it is a pleasure to be with you, even if we have to do this virtually. But the markets have done extremely well. I think everyone has watched in amazement from the market lows in March, almost a year ago, to where we are today. And it has definitely helped fund performance, no doubt about it.
What is the value of the fund now? Estimated.
We have about $74 billion in assets under management. We'll be working about what that value is between the principal and the earnings reserve account here in the next couple of weeks with December 31. But if we look back on November 30th, the fund was at about $69 billion total. So the fund continues to grow. And I think that's been helpful for all of us.
And within that, what is the earnings reserve component of it?
The earnings reserve component, which is really the receptacle that gets all of the cash earnings and gains when we sell investments, is around $12 billion. So we have about $7 billion, a little over $7 billion, that is free and available for appropriation by the legislature. There's another $2 billion in unrealized gains. This is all as of November 30th. And then the balance of a little over $3 billion has been reserved for the fiscal year 2022 percent of market value draw. So we're anticipating that legislators will appropriate that money and use that money. So we want to make sure we set that aside today.
The meeting of funds for the 22 POMV is the it seems the POMV mechanism has worked very well by all account. And maybe you could just touch on how that works and why it's important to have rules, solid rules that guide permits and management of the fund.
Alaska is an interesting place, Tim. It's a place where we've seen booms and busts over the years, whether it was the fur trade way back a couple hundred years ago, or gold or oil. And what the POMV does is we calculate the market value of all the assets for every year, 5 of the preceding 6 years, and take the average value. And then we calculate 5% for fiscal year 22 of that value. And that's the amount available for this POMV spend rule. What it does is when we have a year like this year where earnings are way up, it prevents from overspending it and having those sort of boom cycles in government spending as well. And it provides steady growth to match with inflation. So you'll see every POMV tends to or has gone up about 200 million each year. Now, obviously, if the market value of the fund is something closer to 60 billion than 70 billion at the end of the fiscal year, we'd see that POMV decline, but it wouldn't be the big drop that you sometimes felt with oil revenues, for example. It would be a much more gradual decline because it would be factored into and blended in with those other years where the market value was good.
So it's been pretty steady. The last 2 or 3 years, it's been about 3 billion paid into the treasury. And
it has, yeah.
And I am very impressed with the fact that the permanent fund is now 70% of our state's general fund revenue. Oil is less than 25%.
Mm-hmm. And to think about what this really means is that if we're 70% of the unrestricted general fund budget, which we are, that means 70 cents for every dollar that's going to public safety and state troopers is being generated by the permanent fund. 70 cents of every dollar spent on student spending for education in our public schools is being generated by the permanent fund. So the permanent fund has become much more important and invests much more in Alaska than we ever saw in previous years.
I mean, it really goes back to the original purpose of the permanent fund. In 1976, people, look back to why it was created, and it was created just for this purpose to help sustain our state when oil revenues start to wane.
I think we're really fortunate as a state to have something like the permanent fund. It gives us exposure to economies outside the state of Alaska. A lot of states have to rely on their own economy for sales tax revenue, income tax revenue, that type of thing. What the permanent fund does is by investing in economies all over the world, we bring that growth and benefit to the state of Alaska and can deploy it in our state to help with everything that's going on.
So it's the ultimate diversification.
Absolutely. Yes.
Angela, there was a tough time back in 2009, though, when financial markets really collapsed. And I know that would have to it'd be really tough if that were to happen again. But how bad did it get in 2009? Was the permanent fund in the red that year? Of course, we came out of that pretty quickly. Right?
We did. You'll see that the permanent fund earnings were negative by double digits. The fortunate thing is that there was still money in the earnings reserve account. There were positive earnings in the sense of even despite valuations being so below cost and creating that unrealized loss, you still generate positive income. You still collect rents. You still collected interest coupon payments off of bonds, and that did allow for continued payment of dividends. But if you remember when those years were factored into the dividends, for those that got dividends in 2011, 2012, those dividends were $800, $900 a person. So
Yeah.
you can see how low investment earnings can really impact the ability to distribute through any mechanism from the permanent fund.
Yeah. Well, at any rate, we are very fortunate to have the permanent fund and to have you and your colleagues doing good work in jail, Angela. So thank you very much for joining us.
Thank you, Tim.